Thing number one, despite what you may hear anywhere, Oklahoma is doing very, very well versus the rest of the country. Oklahoma in the last 10 years, if you under any objective measure, we're one of the top performing states in the country, whether it's domestic product growth, employment, whatever statistic, and you'll hear a lot of information, I think, from Commerce that will share some of those statistics with you. So we are doing very, very well in Oklahoma. So on the one hand, whatever our tax structure is in Oklahoma, it is doing a good job of not holding us back. And on the other hand, we really don't want to do anything to mess it up, okay? And that's what you always got to be careful about when you start getting political solutions to problems that may not really exist.
We have so many openings right now in terms of our production occupations, our mining occupations, and we simply don't have the people who have those right skills, knowledge, and abilities to fill those very high-paying jobs, particularly in the aerospace and energy industries. When we look at the new jobs that are going to be created from 2000 to 2010, we can see that a large portion of them, nearly 50%, require some college, some vocational skill, at least an associate's degree, something beyond a secondary degree to be successful in the employment and workplace.
There's an awful lot of errors in there, and I've argued that Laffer's simple-minded presentation uses carefully selected, non-comparable, and inconsistent facts to make their case. Further, that many of the facts of equal standing were omitted. It suffers from a heroic case of what we call omitted variables bias. For example, their idea of what makes a state grow. Pretty simple. Population, well, that's a no-brainer. Share of taxes is a share of income, and the top combination of federal and state income tax rates. Apparently, those are the only things that make a state's economy grow. There's no role for human capital, there's no role for capital, there's no role for infrastructure. Those are the only three variables they use. If you evaluated a company on this basis, looked at their cash flow, their profit statement, you're basically saying that having more workers is a good idea, but paying for them is a bad idea.
Even the most rigorous research is inconclusive and doesn't offer much insight for particular tax cuts in particular states. The plan for Oklahoma is not supported by the research, mostly because there's really no precedent of a state eliminating a source of 30% of its state and local tax revenues. There's other things that aren't in the policy proposals and that aren't in the discussions that are very important, and that is what's going to happen for expenditures. The research does tell us, and there's very reliable research, that if you fund tax cuts by reducing spending on necessary infrastructure like roads, bridges, education, then you're going to experience negative growth because businesses need those things to operate.
Okay, I'm ready for the next one. So let's look at the worst of all possible cases. That is that the so-called Laffer-based proposal is adopted and signed by the legislature. What's the tax hit? Well, if you think the tax hit's pretty moderate today, you have to look out 20 years and see where you placed yourself. And that's in a pretty significant hole. That's hence digging a hole deeper.
Let's say I'm earning $50,000 and I don't have $2,500 in income taxes. Well, there's two ways to posit this one. If I spent all of that money on sales taxable items, how much money would that generate for the Treasury? Answer, about 120 bucks. Well, economic growth, economic development. My income could go up. How much would my income have to go up in order to make up the deficiency in the state treasury? Answer, $50,000. It can't work. The math is so obviously insane. It can't work. The scariest part of this is if it doesn't work, you can't fix it. That just keeps me up at night, okay? If this thing goes all pear-shaped, you can't fix it, okay? My old boss used to say when the legislature would send down some piece of work, and he'd say, well, they didn't get it right, send it back up to them. And I said, well, they passed it. And they said, in 2 hours they can pass another bill. They can fix it. This you can't fix. This you can't fix. There seems to be no understanding of the constraints that are built into the system. Nobody over there is reading the state constitution. For all these constitutional lovers of our fathers, okay? Nobody's reading our state constitution, okay? Our state constitution says that if you want to have a tax increase, you've got to have a supermajority in both houses. And I'm here to guarantee you, that's never going to happen. That is never going to happen. So if you undo a tax, you can't redo it again.
And then what you find too is that companies never do go to the cheapest location. They go to the place where they believe they get the best value for what it is they invest in and the costs that they pay. They want good infrastructure. They need highways, roads, airports, ports, utility infrastructure, communication infrastructure, so they can get their raw materials in or get their services and products out. So that is a huge factor that goes into the competitiveness of a region. Another, this has been mentioned, is good education facilities, because when they go to a place, they have to rely on the talent that is there and or the talent they can recruit into there. And they know that to keep the talent that is there or to recruit the talent in, it's got to be a place where people want to live.
Let me explain, if for those of you that may not be familiar with the Oklahoma Quality Jobs Program, the Quality Jobs Program essentially rebates back to a company that has certain wage thresholds. It's about $30,000 per year, a little over $30,000 per year. They have to be in certain qualifying industries. They can receive up to 5% cash back for a period of 10 years on those new jobs. That is funded by the income tax solely. And to me, that is one of the biggest benefits that we have to give to a company. It seems like in the incentive game, it's never enough for companies, but I will tell you, I think without that quality jobs incentive, we would be in significant trouble here in the state of Oklahoma. And these are other incentives that would also be, I believe, would also be impacted possibly if the state income tax were to be reduced. But I can tell you, quality jobs going away is something that keeps me up at night.
My view is that this is designed to shrink the size of government, but it's not doing it in what I consider to be an intellectually honest way. And I'm willing to debate what's the proper size of government. If one believes that the government is, quote, too large, then the intellectually honest way to do it, the way that makes some sense, is to decide which particular policies, which particular proposals don't meet the standards that were designed for those particular agencies, proposals, or policies. Put it up to a vote and get rid of it. That requires, however, thinking, analysis, and some type of will to do that. The easy way is you just starve the whole beast, and then the result of that is, as we and Scott will affirm, if you're trying to balance a budget where you don't have enough money, you end up with no real centers of quality and excellence. Everybody gets to be mediocre.
At least the initial cuts would be the top rate. So think about which households fall in the top income tax rate. And the figure I put up was from the ITEP, and they suggested that 60% of the households, the lowest 60%, the lowest incomes, would incur actual tax increases because they no longer can take exemptions that lowered their taxable income. And so definitely there would be a shifting of who pays the tax, particularly if the cut from the tax rate is borne by the lower income households.
Let me leave you with this one last rhetorical question. And this person wanted to know, basically it's a compound question, how's this train going to be stopped and who is going to be the adult in the room? I'll leave that to the audience to figure that one out. Thank you very much.